What if the biggest reason you're not making money in trading has nothing to do with your strategy, your indicators, or the market itself? Think about that for a moment. Every day, thousands of traders stare at the exact same charts. Some quietly build wealth, while most walk away frustrated, confused, and wondering what went wrong. The market didn't choose one over the other. Their minds did. The truth is, the greatest battle in trading is never fought on the screen. It's fought in the silent conversation you have with yourself just before you click the buy or sell button. One thought can create patience. Another can create panic. One emotion can protect your capital. Another can destroy months of progress in just a few minutes. Imagine waking up one day and realizing that the market was never your real opponent. Your fear of being wrong was. Your need to always be right was. Your inability to trust your own process was. And once that realization becomes clear, everything begins to change. In this video, you're not just going to learn new trading ideas, you'll experience a completely different way of thinking about risk, uncertainty, discipline, and confidence. You'll discover why most people unknowingly trap themselves in emotional cycles that repeat over and over, why successful traders see opportunities where others see danger, and how small changes in the way you think can create massive changes in the way you trade. Each chapter is designed to build on the one before it, taking you step by step from understanding the hidden mental habits that keep traders stuck, to developing a mindset that stays calm under pressure, thinks in probabilities instead of emotions, and makes decisions with clarity instead of impulse. By the time we reach the final chapter, you'll see how every lesson connects into one powerful breakthrough that can completely transform the way you approach every single trade for years to come. Because the strongest traders aren't the ones who predict the market. They're the ones who master themselves before they ever try to master the chart. If you enjoy deep psychology-based trading lessons that help you think differently instead of simply chasing the next strategy, take a moment to like this video and subscribe to the channel, because we're just getting started and there's much more to explore together. And make sure you stay with us until the very last chapter, because that's where everything comes together. The final lesson is the difference between trading with hope and trading with true conviction. And once you understand it, you'll never look at another trade the same way again. Chapter 1. Why most traders stay broke before they ever touch the market. Imagine two people sitting in front of the exact same trading chart. They have the same internet connection, the same market data, and even the same strategy. A few hours later, one closes the day with steady profits while the other walks away frustrated, blaming the market for another loss. What changed? Not the chart, not the market. The only difference was the person looking at the screen. Most traders believe success begins when they find the perfect strategy. They spend months jumping from one indicator to another, buying expensive courses, searching for secret entry signals, and constantly changing their approach after every losing trade. They believe the next system will finally solve all their problems, but the market doesn't reward people who collect strategies. It rewards people who control themselves. The real reason most traders stay broke long before they place a trade is because they enter the market carrying invisible emotional baggage. Fear whispers that every loss is a personal failure. Greed convinces them that one big trade will solve everything. Ego refuses to admit mistakes. Hope replaces discipline. Without realizing it, they bring all of these emotions into every decision. Picture a pilot flying through heavy clouds. If the pilot ignores the instruments and follows only feelings, disaster becomes almost certain. Trading works the same way. The market doesn't care how confident you feel. It responds only to your decisions. Here's something interesting. Every losing streak doesn't just reduce your account balance. It also changes your thinking. You begin doubting good setups. You hesitate when you should act. Then, after missing an opportunity, you jump into the next trade too late because fear has already taken control. This cycle repeats again and again. Loss creates fear. Fear creates hesitation. Hesitation creates poor decisions. Poor decisions create even more losses. Most people believe they're fighting the market. In reality, they're fighting the emotional patterns inside themselves. The market simply exposes what already exists in the mind. That's why two traders can experience the exact same price movement and walk away with completely different results. One reacts emotionally, the other responds with discipline. One tries to prove something, the other simply follows a process. The journey from zero to extraordinary results doesn't begin with finding better trades. It begins with becoming a better thinker. Because the moment your mind stops treating every trade as a test of your worth, something remarkable happens. You stop chasing certainty and start making decisions with clarity. And that raises an even bigger question. If controlling your emotions is more valuable than predicting the market, how do consistently successful traders stay calm while everyone else is overwhelmed by fear and excitement? That's exactly what we'll uncover in the next chapter. Chapter 2. The mental shift that separates consistent winners from emotional losers. Think about the last trade that kept you awake at night. Maybe you exited too early because you were afraid of losing a small profit. Maybe you held a losing position far too long, hoping the market would turn around. Or maybe you watched a perfect setup pass by because you were still thinking about your previous loss. On the surface, these look like different mistakes, but deep down, they all come from the same place. The mind is searching for certainty in a world where certainty does not exist. This is where most traders quietly lose the battle. They don't struggle because they lack intelligence. They struggle because they expect the market to give them guarantees. Every trade becomes a question they desperately want answered before they click the button. Will this one work? The problem is that no one can answer that question, not before the trade begins. The traders who produce consistent results understand something that most people never fully accept. Every single trade is only one event in a much larger series. One outcome means almost nothing by itself. It is the quality of your decisions over hundreds of trades that shapes your future. Imagine flipping a perfectly balanced coin. You already know that heads and tails will appear in an unpredictable order. But after enough flips, the probabilities reveal themselves. You don't become emotional over one flip because you understand the bigger picture. Professional traders learn to see the market the same way. They stop demanding certainty from individual trades and start trusting the consistency of their process. That shift changes everything. Fear begins to lose its power because a single loss no longer feels like failure. Confidence becomes quieter. Discipline becomes stronger. Patience becomes easier. Instead of asking, "How much money can I make from this trade?" they begin asking, "Did I follow my plan?" That question transforms trading from an emotional roller coaster into a repeatable business. Here's the surprising part. Real confidence doesn't come from winning. It comes from knowing that you can follow your rules even when the outcome is uncertain. Anyone can feel confident after 5 winning trades. Very few people remain confident after 3 losses while still executing their strategy with complete discipline. That is where true growth begins. The market rewards people who can stay emotionally stable when everyone else is reacting. Because consistency is not created by perfect predictions, it is created by consistent behavior. And once you stop measuring yourself by the outcome of one trade, you become free to focus on what actually matters, making the next good decision. But there's one invisible habit that quietly destroys even disciplined traders, often without them realizing it. Understanding that hidden habit is the key to thinking in a completely different way, and that's exactly where we're going next. Chapter 3. How to think like probability. Instead of chasing every trade, picture yourself standing beside a river. You can't force the water to flow faster. You can't demand that every wave move exactly the way you want. The only thing you can control is when you choose to step in and when you decide to stay on the shore. The market works the same way, yet most traders spend their days trying to control what was never theirs to control. They want every setup to become a winner. They want every prediction to be correct. They want certainty in a place that has never promised it. And without realizing it, that need for control becomes the very thing that controls them. Here's what consistently profitable traders understand. Every trade is simply a possibility, not a promise. The moment you begin expecting a trade to reward you, your judgment starts to change. You ignore warning signs. You move your stop loss because it will come back. You increase your position size to recover a previous loss. Slowly, logic steps aside, and emotion takes the driver's seat. Now, consider a skilled poker player. They don't panic after one bad hand. They don't celebrate as if they're unbeatable after one good hand. They know that one hand means almost nothing. Their edge appears only after hundreds of disciplined decisions. Trading follows the same principle. Your goal is not to win every trade. Your goal is to repeatedly make high-quality decisions and let probability do its work over time. That sounds simple, but emotionally, it's one of the hardest shifts a person can make. Why? Because your brain naturally connects being wrong with failure. Every losing trade feels personal. It feels like proof that you made a bad decision. But those are two completely different things. A good decision can still produce a losing trade, and a bad decision can sometimes produce a winning one. If you judge yourself only by the result, you'll slowly train yourself to abandon good habits and repeat bad ones whenever they happen to pay off. That is a dangerous cycle. Instead, begin measuring something different. Ask yourself, did I follow my plan? Did I respect my risk? Did I stay patient until my setup appeared? When those answers become more important than the money made or lost on a single trade, something remarkable happens. The pressure begins to disappear. You stop chasing the market. You stop forcing trades. You become comfortable waiting because you understand that patience is part of your edge. Results no longer control your emotions. Your process does. And that's the mindset that allows consistency to grow quietly, one disciplined decision at a time. But even with the right process and the right understanding of probability, one final challenge remains. It's the invisible psychological habit that separates traders who occasionally succeed from those who build lasting wealth. And once you understand it, you'll never approach the market the same way again. Chapter 4. The invisible psychology that can turn an ordinary trader into a wealth builder. Imagine looking back at your trading journey 5 years from now. Not at your account balance, not at the number of winning trades, but at the person you became because of the process. Would you see someone who reacts to every market movement with fear, or someone who remains calm while everyone else is caught in emotional chaos? That is the final lesson. The market is not designed to reward the smartest person in the room. It rewards the person who can remain the same person, regardless of what the market does. Most traders believe discipline is something they use only while placing trades. In reality, discipline begins long before the market opens. It begins when you prepare without knowing whether you'll trade that day. It begins when you patiently wait while others chase every price movement. It begins when you accept that doing nothing is often the most profitable decision. Think about a master archer. They don't release the arrow simply because they are holding the bow. They wait, they breathe, they focus. And only when everything is aligned do they let the arrow fly. Trading demands the same patience. Every unnecessary trade is a decision driven by emotion. Every unnecessary risk slowly weakens your confidence. Every broken rule quietly teaches your brain that discipline is optional. And once discipline becomes optional, consistency becomes impossible. Here's something that few traders ever realize. Confidence is not built by making money. Money can disappear. Winning streaks can end. Markets can change. Real confidence is built by repeatedly proving to yourself that you can trust your own behavior. When you follow your plan after a loss, confidence grows. When you refuse to chase a runaway market, confidence grows. When you accept a small loss exactly as planned instead of turning it into a disaster, confidence grows. Notice the pattern. Confidence is the reward for disciplined actions, not profitable outcomes. That changes everything. Because once your confidence no longer depends on today's profit or loss, the market loses its emotional control over you. You stop trying to impress others. You stop searching for shortcuts. You stop believing that one trade will change your life. Instead, you begin respecting the quiet power of repetition. One disciplined decision, then another, then another. Over weeks, those decisions become habits. Over months, those habits become your identity. And over years, that identity shapes your financial future. This is why extraordinary traders rarely look extraordinary while they're working. They aren't constantly excited. They aren't constantly stressed. They don't feel the need to predict every move. They simply execute their process with calm consistency, knowing that the future belongs to those who can repeat the right behaviors long after the excitement has faded. In the end, wealth is not created by one perfect trade. It is created by thousands of ordinary decisions made with extraordinary discipline. The market will always be uncertain. News will change. Prices will rise and fall. Opportunities will come and go. But the one investment that continues to pay you every single day is the quality of your own mind. Because charts may show you where price has been, strategies may suggest where price could go, but your psychology decides whether you'll still be standing when the next opportunity arrives, and that is the difference between someone who spends years chasing the market and someone who quietly builds a lifetime of success, one disciplined decision at a time.